Hello, welcome to AleaSoft webinar. My name is Alejandro Decado, Associate Partner of AleaSoft, and thank you for joining us today in this webinar with the topic Prospect for the Energy Markets in Europe for the coming winter, Renewable Energy Projects Financing. As usual, our first speaker today will be Oriol Saltó, Associate Partner of AleaSoft, that will analyze the evolution of the European energy markets and the prospect for the winter. Then, we have several speakers from Deloitte sharing this webinar with us for the fifth consecutive year, and that will talk about the financing of renewable energy projects, the prospects for batteries and hybridisation, and the importance for price forecasting in audits and portfolio valuation. They are Carlos Milans, Partner of Financial Advisory, Álvaro Antón, Director of Financial Advisory, and Bárbara Cueto Felgueroso, Director of Corporate Treasury Advisory Services. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoyed the webinar. You can start, Oriol.
As Alejandro mentioned, I will cover the first part.
Oriol,
sorry?
Yeah, we started hearing you now. Yeah.
Okay, yeah, I see. Yeah. Okay, so as Alejandro mentioned, I will cover the first part of the webinar. We will be looking at the energy markets, oil, gas, CO2, electricity, how they have been evolving in the last weeks. We will be comparing them with what we saw in our last webinar 4 weeks ago. And then we will talk a little bit about the midterm, about how we are facing the winter. To begin with, a few words about AleaSoft and the services that we provide, in case you don't know us. In AleaSoft, we provide forecasting services, modeling services, and analytic services for energy markets. We cover all the energy markets in Europe. We also cover some markets in the Middle East, South America, North America. And we are ready. We have data available to cover basically any energy market all around the world. The methodology that we use for modelize, analyze, and to forecast energy market is our own methodology developed by ourselves specifically for forecasting in the energy sector. The 3 main points that we always like to stress about our methodology is that it is a completely scientifically based methodology. It's a hybrid model combining different techniques, since the more classical statistical techniques like regression, time series analysis, econometrics, etc., combined with more advanced techniques of artificial intelligence, machine learning, recurrent neural networks, etc. And one of the aspects of our methodology and our forecasting that our clients appreciate the most is the robustness, the coherency, the stability of our forecast that keep coherency delivery after delivery. And well, this is the methodology that we have been using now for 25 years. This year we are celebrating the 25th anniversary of the company. We started in the Iberian electricity market, and now we are covering, as you have seen, markets all around Europe and all around the world. We provide a variety of services covering basically all the needs for all the players in the energy sector. We have them under different divisions. Alea Green covering all the long-term forecasting, long-term reports for PPAs, for renewable projects. In Alea Blue, we provide short-term and mid-term forecasting, price forecasting, demand forecasting, renewable energy forecasting. In Alea Hub, we have different marketplaces for PPAs, if you are a project looking for an off-taker, if you are an off-taker looking for an energy provider. And we also have a marketplace for renewable projects or renewable assets that you can say or you can buy. Under Alea Storage, we provide services for batteries, for energy storage systems, revenue forecasting, optimization, putting the right dimension on your energy storage system. Under Alea White, we provide information. We publish regularly reports about the energy markets and how they evolve. We every month we do these webinars where we have invited the speakers, and we also provide all kinds of reports about any aspect that can be interesting for the energy sector, future of the electricity system, green hydrogen, law reports, whatever is needed that we can analyze and modelize about the energy market. And under Alea Consulting, any consulting need that you have for making a strategic decisions. With all these services, we cover basically the needs of all the players in the energy sector. We have clients both in the production side, on the consumption side, grid operators, TSOs, DSOs, retailers, utilities, EPCs, banks, investment funds. So basically any player in the energy sector, at some point, they will need one of our multiple services. So let's start with evolution of the fuels markets and CO2 markets. We always start with Brent prices. So oil prices in the last weeks, basically the behavior can be defined under the term of uncertainty, basically mainly due to geopolitical uncertainties, mainly coming from the conflict in the Middle East, basically introducing a lot of uncertainty. Prices have been fluctuating from the $70 per barrel up to $80 per barrel, at some point even more. Now they are down because there are news about oil projects in different countries not being affected by the war conflict. So basically instability and volatility. But beyond that, beyond the instability, the volatility that we are seeing at the short term, at the midterm, basically the main concerns are about the demand and supply balance. So basically demand is really growing very slowly, much slowly than expected. One of the main contributors to this is China, that its economy is growing at a slower pace than expected. And on the supply side, we have a lot of production. OPEC countries at some point, they are planning to start increasing the production again. And other countries from America mainly are still producing at a very high rate. So basically, we are expecting for the coming months a lot of supply, a lot of production, and not much less increase in the demand side. So basically, at the midterm, prices will experience downwards pressure, but within that, the short term, we can still expect some volatility. From gas prices, basically, these are the TTF front month futures, that the reference prices in Europe. Basically, we keep seeing these upward trends. It looks like the 40 euros megawatt level is some kind of still a hard resistance. Let's say it may look that at some point we can break this level. Basically, geopolitical uncertainties, the increase in demand, mainly coming from Asia, all of this is putting pressure. Also, still in Europe, the remaining Russian gas that comes through Ukraine, it's going to finish at some point, probably by the end of the year. As we have mentioned in previous webinars, it's not much of the supply. It's around 5% of the total supply, but still, the situation is delicate in Europe. So, news, rumors about any probable or possible disruption on the global LNG supply, it's putting volatility into the market. So, at least for the coming month, we don't expect prices to go down. Probably they won't go up much more, but it's not a clear. There is not a clear sign that prices will start going down, at least for the next winter, and for this winter basically, and maybe until the next winter we will still see higher prices. Higher prices, although we are facing the winter supply in a very comfortable situation, let's say. Basically, the gas reserve storage is above 95% right now. The target was to get by 90% by the 1st of November, when the heating season will start. So basically, unless there is a very critical, extreme situation about the weather, so unless it is a very cold winter, and unless there are many huge disruptions in the LNG global supply, we will be facing a comfortable situation looking at this winter. Although, because the situation is not really stable, we will keep seeing high prices. CO2, on the other hand, is basically in a slightly downward trend right now. So prices are now around 65 euros per ton. For the rest of the year, probably there is no sign that prices will start increasing, basically because there is low demand for CO2 allowances. We have a lot of renewable energy in the electricity system, so basically there is no need for much electricity production using gas or coal. That are the ones that need CO2 allowances. And also the industrial demand, that it's the other one that needs emission allowances. It's still really weak. It's recovering industrial demand, but it's still weak. In 2025, maybe the situation can start to change if the economy start recovering much faster. Then the demand for allowances will increase, and as each year the supply is going to be reduced. So this balance between supply and demand can be a little bit tighter. So we probably in 2025 we will start seeing again CO2 prices increasing. And now let's have a look at the electricity market prices. I always take this opportunity to show the online platform that that we have. It's a service that we provide to our clients. So basically, those are the monthly average prices for some of the most important electricity markets in Europe. So the last full month that we have is September, and basically comparing September with August, that it's the last full month that we had in that we showed in our last webinar, prices on average have been going down. So basically temperatures are less extreme, so are less hotter, less warmer. We have had more wind during September. In that change from October to September, gas prices decreased a little bit. So basically, prices on average have gone down. The largest drop in prices was in Spain, 20% drop. Then most of the countries are between 5%, 9% drop. The exception is UK. UK have been up by 30%, so quite a lot. If we make a zoom in the last weeks, those are the daily average prices for those markets. Basically, what we see from August to September is that at the beginning of September, prices were we had kind of a peak of the prices, but then during the rest of the month, prices have been going down. Italy is still the market with the highest prices. France is still the market with the lowest prices. Looking now at the hourly prices, those are the hourly prices since September, so September and so far in October. And we see that we are still having, as expected, some zero negative low prices during some hours, mainly during solar hours. But although this, they are not as common or as low as we have seen during spring this year. So situation for PV plants are much comfortable, let's say. And I usually show the prices in Spain, in the Iberian market. Let's talk about other markets. Here, we usually don't talk about UK, and UK it's quite an interesting market. Here we can see the prices for the UK market in orange compared to France in red and Spain in blue. And basically you can see the prices in the UK are in pounds. So basically you have to increase it by 15% to get euros. So basically you can see that the level of the prices are more or less similar as Spain, France, and other markets in Europe. But it's a quite interesting market because although they have negative prices, low prices or zero negative prices are not so common as they are in Spain and France. So a very interesting market in the UK is usually one of the markets with not the highest, but on the high band of the prices. The market with a lot of batteries compared to other markets in Europe, batteries that have been since now providing mainly balancing services. And now that the balancing market is kind of full of energy storage, now they are focusing to the daily market, to price arbitrage, that it's something that we expect more or less in all the markets. So providing balancing services, it's a start point for batteries and for energy storage, but at some point that market is full, and they need to focus on price arbitrage, that it's going to be at the long term one of the most important pieces on the revenue stack. Okay, going back to our slides, let's take a look at the forward markets. What are the forward markets telling us right now about the energy that is going to be delivered into the future? So basically, this is the forward curve of the Brent futures market. We are comparing it with the one that we saw in our last webinar. Basically, no change. We have seen a lot of volatility in the spot market, but it's kind of volatility around the same price. So basically, no changes in the forward curve. Some important changes in the futures market, in the gas futures. A lot of increase in the short term, 7% for Q4, 5.8% up for 2025, 5% 2026, 5% 2027, and then less and less. Basically, coming from what we said about the uncertainty and about the increase in demand coming mainly from Asia. So the next winter, the next year is going to be a little tight on demand and supply balance. But as demand increases, but also supply increases, prices will then go back to that equilibrium price that it's now more or less around 25 euros megawatt hour. And looking at the CO2 forward curve, basically no changes. Spot prices have been, as we have seen, decreasing at a very slow pace. Basically no changes in the forward curve. And looking at the forward curve for electricity markets, basically following the increase in gas futures, increases mainly in the first years, 7.3% for France, 5% Italy, 2.5% in Germany. About the changes at the long term, we have said a lot of times that they are not reliable, so I'm not gonna comment on that. And just as a summary of what we have seen, basically what we are taking into account when making forecasts right now, it's basically a summary. I don't want to take more time because we have a lot of speakers afterwards. Basically, talk about at the very long term, where energy storage, renewable energy, hybridization, green hydrogen, all these key features on the energy transition are the ones that are going to play a major role when setting prices at the very long term. And just let me finish inviting you to our next webinar. It's going to be next month, November 14th, and we will be talking specifically about batteries with Luis Marquina, that has been also another time in our webinars. We're talking about batteries, energy storage, and their key role in the energy transitions. The next 5 years are going to be mainly the main actor are going to be batteries and the electricity markets in Europe. Thank you, Alejandro.
Thank you very much, Uriol. And thank you, Carlos, Álvaro, and Barbara for sharing this webinar again with us. They are always a highlight of the year for us. Carlos, when you're ready, you can share your slides.
Hi, good morning, everybody. Thanks for attending. In fact, it will be Álvaro Anton who will start on our presentation, and then I will talk about batteries. But just a quick word to thank everybody for assisting. We have been doing financing of renewables since the late 90s, so we do accumulate a lot of experience. We have witnessed a lot of changes in the market until the situation today. And certainly, the more the energy transition advances, the more complex and different KPIs and parameters need to be taken into account. So thank you, and I will speak to you in a while. Álvaro, all yours.
Okay. Yeah. Thank you. Hold on a second. I'm going to. I do not know if I am able to share my screen.
Yeah,
Maybe
we are
Carlos, if you
seeing
can help me.
we are seeing your screen. You need to make it full screen.
Okay, that's great.
Perfect.
Okay, so that's perfect. Look, thank you very much. Again, this is just a quick overview of what Deloitte can provide on the renewable space. I mean, Deloitte offering has been very much focused on renewables for all the life cycle of the assets, since starting with the permitting and licensing, going through the engineering, construction monitoring, and as well on the funding side to find partners and investors, obviously to find financing and structuring PPAs, which will, as we'll mention, is going to be a key element, or is a key element of the financing of this type of transactions, and then ending with as well with capital market readiness and obviously the monitoring during the operation of these assets. So Deloitte is pretty much experienced on all of these tasks, and this is one of our key strengths, the renewable space. Okay, so I think just to have a quick overview from where are we coming from. As everybody knows, energy transition is something that is on the table for a few years, where basically no feed-in tariff or no subsidies is now in place in most of the countries. That is because we have grid parity on the renewable technologies. They have reached a technical situation where prices at the pool prices for capex and investment at the pool prices and the is absolutely enough to find adequate business case with adequate IRRs for investors, and as well what we have here is a very strong support for the European Union in particular, with a very strong targets for 2030 and 2050. In Spain, in particular, there is a target to reach more than 100 gigawatts by 2030, and that means, as you can imagine, a lot of investment needed by all parties, meaning equity and debt providers. In addition to that, well, everybody knows that the pool price or the electricity price has been something within the recent years has been a lot of volatility. Certainly, that is something where the equity providers and the debt providers needs to take into account in order to mitigate adequately the business case and just to have a succeed on the investment. So this is one of the key points of the merchant risk, which is one of the topics that will need to be treated during the financing and for the equity deployment as well. in that sense, as I mentioned, particularly in Spain, we have a very, very strong renewable resource, and as well, there is a lot of there's a very good technology and capacity to build and to develop these renewable assets. Again, there is a strong support from the authorities, particularly in Spain. In the previous years, we have had some problems in releasing all the permits, licenses, and environmental authorizations. What we have seen is this pressure is being released a little bit in the recent months. So the authorities are trying to do their best in order to try to have all the files approved on a timely manner. So that's work in progress. But what we can say is this has been, this has been treated positively in the recent months. And as well, as I mentioned, there is a lot of money ready to be invested in this type of transactions, which is something strategic for the countries, and obviously this green angle for either equity providers and debt providers is a key element for them for their investment strategies. Then due to the volatility that we have seen on the previous slide, then this is something that, as I mentioned, this needs to be treated. When we talk about merchant risk, is mainly the revenue stream for this type of assets, where volume risk is something where everybody feels comfortable, because this is something being analyzed in depth for under due diligence, under the probability of scenarios of production, which is the P50, P90, P99. So this is something quite standard, and everybody understands this point. What is true is that we are recently having some curtailment risks, and this has been mentioned by Oriol with those negative prices, which has not been that much during September, but certainly this is a risk that both equity providers and lenders, they have an eye on that, and they are starting to try to mitigate this potential risk with projections and with some conservative assumptions from the technical advisor when they need to do the production analysis. But this is something that is under control. So here there is no big uncertainties more than being more conservative. The question here is the mainly question here is the pool price, where it is quite important to have these market advisors to produce the different long-term view of the electricities, and each of these entities, either equity or either lenders, try to have their own view of how this will be evolving in the future. So this is particularly what the lenders and equity providers will be calling the merchant risk. On this angle, debt providers, as I mentioned, they feel comfortable with most of the parameters of most of the assumptions, which is capex, opex, tax assumption. Well, this is always been conducted. This is always been conducted under the due diligence, and there is no, wind and solar is pretty much predictable on that sense. You may have different trends of capex pricing, but at the end, this is very much under control. And again, in production, as I mentioned, there is probability of occurrence of the productions. Lenders always try to be more conservative, so they go for a P90 production, while holders, they try to use the P50 for calculating their investment returns. Then the key question here is, again, is this merchant risk, how to behave with that merchant risk. The idea here is, well, there is lenders, there is lenders that they may be more flexible in order to approach to this type of risk. But the reality is that in this situation we need to have this the PPA mitigant of the merchant risk. That is obvious. Where we can find a few lenders doing merchant risk, and this is how we can group the lenders. There is lenders where they can do 100% merchant risk, and most and the majority is having a PPA, a 10-year, 12-year PPA plus merchant risk on the tail of the financing. But the reality is that those lenders that they do full merchant risk, there are just a few. What we have seen with the recent volatility of the market is those lenders, they are sort of stopping, providing this type of structures, and they are what they say, they are having under review by their credit committees the strategy for the merchant risk. So today is a bit difficult to find a transaction or a lender ready to do full merchant risk. But in any case, if there is any, that will be small amounts, small plans, under very conservative debt sizing. Then the majority, as I mentioned, will need to have a PPA. And that is how at this moment they behave. There is two structures for PPAs, which is the fixed price, the swap, and the floors, or a combination of both. Swaps, just to provide the key points for each of these structures, is swaps. They are able to raise a higher debt. However, the leverage, however, the IRR of the transaction is not that good. That is basically because at the end, the off-taker will, let's say, destroy value for the shareholder, which means that the off-taker needs to retain the upside from the strike price, from the fixed price, to where is the market, and in such a way the SPV of the project will not benefit from that upside of the price. Whilst on the floors, that is a structure where the selling the off-taker will provide this upside to the project, and therefore the leverage will be a little bit lower. However, the IRR will be higher. On these PPAs, just to be quick, we see there is a lot, in terms of tenors. We see PPAs from 1 to 5 years, which are not bankable. There is no appetite for lenders to get into this type of structures for project financing. However, those PPAs beyond 8 years to 15 years, that would be the ideal spot for lenders to have on the financing. Then what we have done here is just an example for you, so you can see how is the impact of these potential structures of full merchant versus a PPA with swap or a PPA with a floor. And here what we have considered is very standard hypothesis for a standard PV plant, which means 35 years, 2,000 net equivalent hours. That's a good project. Then the capex is 650K, which is quite a standard. Obviously, that will depend on the case, on the grid structure, and as well some concept of development fees, which may vary from, we are considering 100K, but there is some volatility on that number as well. So, well, I do not want to go in detail to each of these assumptions because I understand that you will know them. But here the important thing is in these slides you will see this sensitivity analysis, where what we have tried to do is here is you will have the price, the average price of the pool price, going from 60 euros per megawatt to 30, and here you will have the different net equivalent hours a PV plant. No, so again, 2,000 net equivalent hours is a good project. Typically, what we see is, projects in Spain, they are within 180,000 to 2,000. So you will see the IRR, which is being highlighted in green, those that they are above the 8%. So if we place, and this is on a full merchant basis, so there is no PPA here. If we include the PPA on a fixed price, and that fixed price is 35, you will see that the green areas has been reduced, and therefore that means that the IRR of the potential IRR of the sponsor is lower, and that is because the off-taker is capturing a lot of value of the project by that fixed price. There is no upside from 35 euros per megawatt, because anything above that on the pool price will be captured by the off-taker. Then if we simulate the results for a floor, you will see that the green areas are increasing and the IRR is increasing, and that is because at the end, and as I mentioned, the project will be paying the premium, and the premium is this 8 euros per megawatt hour with an strike of 30, which means that anything above 30 euros on the pool price will be captured as well by the project. So here basically is this is again the graph with the pool price showing the volatility that needs to be taken into account. This is precisely what I mentioned is why we need to use the PPAs and all that evolution of the IRRs and the different structures for the lenders and for the equity providers. So at the end, just as a conclusion, today we are in a situation where renewable projects, they do not have any subsidies, so no feed-in tariff. Then PPAs needs to be there in order to mitigate as much as possible that volatility risk of the pool price. Therefore, in that sense, and in order to try to have an evolution on both equity providers and debt providers, it is what we see. It is key the development of the future of the electricity future markets. In terms of, there is already this OMIP market. However, what we see is we see only liquidity on the short term, until 3 years. So what would be key here is the development of these markets for periods of 5 to 10 years with more liquidity. Therefore, the prices shown under this future market they are real prices where you can see transactions crossing the market. Then as well is quite important the implementation of energy-based auctions, which is at the end is PPAs under regulated or under the schemes of auctions. Now is quite important to have the storage solutions to be evolving to be something feasible from the economic and the technical point of view, and this is something that Carlos will be commenting at this moment. So all of this is making the equity providers and the debt providers to be more comfortable with the merchant risk, and certainly as much comfortable they are, there will be a softened approach and less conservative approach for the projections, which is at the end is the base of the valuation of this type of transactions. So Carlos, probably if you can take from here. You are on mute, Carlos.
Yes, sorry about that. I was on mute. Are you seeing my screen now or not yet? Sure, 1 second.
Yes, we do.
We are seeing it.
We see.
Right, fantastic. Well, thank you, Álvaro. We have been doing this webinar for a few years now, and certainly the section that has been presented by Álvaro Antón was like the key focus, and we're discussing a lot with both sponsors and lenders on how to finance projects. The PPA was quite an active one. PPA market, the Spanish PPA market is the second most active in Europe after Germany. Has been, in more or less the same situation. Now, most of the players that need it as consumers, very large consumers, and also mid-sized corporates have already entered into PPAs, and therefore now is a much more mature market, and people is struggling in having decent returns. So therefore, the signals for investors to keep providing capital, both in the form of debt and equity to the project is more complex, right? And as Oriol was saying at the beginning, I think that the batteries are going to be the perfect complement for the intermittency of renewable projects. Okay, so we're going to talk a few minutes about batteries, which I think is going to be the key topic coming in the next coming years. As said, is a perfect complement for renewable energy sources because the intermittency of, especially on the wind and on the solar PV, for different reasons. Wind can blow, day, night, and it depends on every other day. Whereas on solar PV, for sure that the sun is going to come up at a certain hour, but for sure that it's going to be away at night, right? And certainly in order to displace that massive solar PV production during the hours, you need some sort of a storage. Storage, therefore, is the perfect complement for renewables, right? In terms of batteries, there has been a lot of improvement in different fronts: capex, efficiency, and useful life. Just to give you an example, capex for batteries have come down 82% in the last 10 years, and probably we'll see much more and further decreases in the coming years, right? It has improved also in terms of efficiency, in terms of energy density. So the same amount of energy can now be stored in a smaller size batteries, which is good for electric vehicles, for instance, not so much for utility scale, where those are standalone batteries or hybridisation projects, okay? And then in the number of cycles, right? This is important, that the number of times that you can charge and fully decharge a battery in the electricity system also is key for assessing the profitability of the projects, right? Just to give you a recent example, in Spain, there has been some subsidies granted to a few projects, battery projects, both in terms of electricity standalone projects and also thermal projects. In particular, there have been 35 projects totaling something like above 700 megawatts of capacity in the Spanish market recently, and the average cost for those assets, as the eligible cost were presented to the tender authority, were in the region of 250,000 euros per megawatt hour. Okay, I think that is probably now much more competitive, because certainly those projects were crafted and designed already a few months ago in order for them to be ready to be presented to the tender. So capex is declining, and then the number of cycles as well, right? There is no doubt that there is an increasing share of manufacturing capacities worldwide, fostered not only by electric vehicles, but also for those batteries to be coupled with solar rooftop in the residential segment and many other uses, especially on the energy storage at utility scale, right? If we now come to Spain, the National Energy Plan, which is called PNIEC, Plan Nacional Integrado de Energía y Clima for 2030, targets 22.5 gigawatts of storage capacity. There is a massive gap compared to what it is under operation today, which is only a few megawatts. Okay, so there is a tremendous gap. How can we cover that gap? The answer is simple. It's all about having the right signals and that the models are profitable from an economic point of view. So there are manufacturers who have the technologies, They are improving, that's true, but today there are countries where they have capacity payments and other, the access to ancillary services and balancing services that can demonstrate the massive deployment of batteries, or at least the quick deployment of batteries on a decent return ahead. However, in Spain, there's still no such a case. However, I think that there is a strong interest, and this is demonstrated by the fact that up to 20 gigawatts of batteries have requested connection to the grid. Of those include standalone and hybridization models. In total, access to the distribution networks is in the region of 8 gigas, whereas access to the transport grid is above 11 gigas, okay? And of those, 7 gigas have been granted access to the grid, and over 4 gigas have been granted access to the distribution networks. This means that in total, 11 or 12 gigawatts of batteries now have the authorization to connect. Now probably are going through the permitting process. However, many people is still on a wait-and-see mode to see whether the new regulation for granting either subsidies, capacity payments, on some sort of regulation is needed. And we're going to see that in the next slide, which we hope is hopeful for everybody, which shows we have developed a very simple financial model to calculate the battery project IRR on a 15-year horizon. I think that less than that, it doesn't have a lot of sense, and longer than that, we're still away and on the technology curve. I think many good things may come. So 15 years is more or less the horizon, the time horizon that we believe is correct for assessing, or at least trying to have a sense of where the profitability of this business is, right? In this sense, what we are seeing here is on the top, the initial capex after subsidies, if any, in terms of thousands of euros per megawatt hour. Okay, we all know have information that the current market is around 150,000 per megawatt hour, where that probably is true for a behind-the-meter battery. Although this recent example that I was mentioning in Spain, where the eligible cost that real projects have presented to the tender of subsidies for batteries were more in the region of 250. The subsidies that have been granted for those 31 projects in Spain is in the region of 50,000. So we will be looking at the 200,000 euros per megawatt hour as a reference case for a standalone battery, and probably in the 150 or even 140 for a behind the meter. Why such a difference? Because on a standalone project, you need to also build the balance of plant, the connection to the grid or to the distribution network, etc. So there are more capex associated to the project beyond the pure cell and battery pack, right? And on the left, we see on the left axis, we see the daily spread. In order to have this table to be simple to read, we have assumed that the daily spread captured by this battery project, whether on a standalone or in a hybrid mode with a solar PV and or wind facility, on a repeated basis every day is between 20 and 120 euros. Certainly, we have seen a lot of volatility, and in certain moments throughout the year, we can see that volatility can even be higher between the lowest price in the day and the highest price in the day. However, for simplification purposes, and in order to be able to read and draw some conclusions, we can have this proxy of a flat daily spread every day throughout the year. So you see that on 150,000 euros per megawatt hour, the break-even point for making the project profitable, it is around 40 euros. So you will need to make 40 euros every time you charge and discharge your battery. And for a decent project IRR, you will need to see prices in the 60, 65, right? Then leverage, and we will see when banks are or lenders are ready to lend on a non-recourse basis to the battery projects. But that is a reference. However, if we are talking now about the projects that have been awarded now the subsidies, so they will be after subsidies in the region of 200,000 euros per megawatt hour. we see that the break-even point is more close to 65 euros per megawatt hour. Okay. Conclusion here is that the profitability of battery projects in Spain is still uncertain. I'm not saying that it's not impossible. Probably standalone batteries are a little bit far away from being profitable or to have a solid investment case. However, batteries coupled in a hybrid mode with existing solar PV assets in particular and wind assets can now start making the case. Why? Because it's cheaper in terms of capex, and because in certain periods of the year and in the central hours of the day, you are going to be sure that you're going to have a nice arbitrage opportunity, right? So you charge during the central hours, and then you discharge on the first peak, on the second peak of the day, which is towards the end of the afternoon and beginning of the evening, and then you still have some remaining power in your battery for the first peak hours before the sun comes up, right? Probably a data point which is worth mentioning is that in those 31 projects that have been presented, all of them had 4-hour storage capacity. When talking about batteries, I think it's important to differentiate between the capacity of the battery and the amount of energy that can be stored in it, right? So if we imagine the typical battery that we put in our electronic devices, right, is a cylinder. So the longer the cylinder, the capacity will be the diameter of the cylinder, right? And the energy that can be stored is the length of it, right? So here the analysis is about energy stored in the battery. So it's all the KPI is euros per megawatt hour, which is exactly the same KPI of the price arbitrage that you are going to try to capture on the market, right? So there, the batteries, this is our view. So many projects in the project financings that we're structuring, many projects are now contemplating the possibility to hybridize projects. I think most of the projects are in the region of 5 to 20 megawatts, saving some exceptions. And I think I'm convinced, and we are convinced, that in the coming years we're going to see a boom of batteries as the perfect solution, or one of the solutions, okay, to overcome the intermittency of the renewables, and the fact that the demand, it is not matching the hourly demand, it is not matching the hourly production when renewables penetrate massively in the energy mix. So I leave it there. So happy to answer any questions by email if you contact us after the webinar. And I let the word to Barbara Cueto, who will also guide you on how how to measure then the PPAs, which is an essential part until the batteries develop to cover the merchant risk and facilitate financing. Thank you.
Thank you, Carlos. Thank you all. Can you see my screen?
Yes,
Yes,
just need
yeah.
to put it to screen.
Thank you very
now.
much. Hi, my name is Barbara Cueto. I'm a part of the financial advisory team in Deloitte. I'm in the corporate treasury side, and I work together with Carlos and Álvaro when structuring PPAs, analyzing the valuation and accounting implications of the PPAs. So as you see here in our offering, we consider for us it's essential to analyze all the potential accounting and financial implications that PPAs can have in the transaction and in the financial statements of the clients. That's why we complement our advice with this analysis of the risk and implications that the PPAs can have before the closing of the PPAs, and then once the PPA is closed, and mainly focused to financial PPAs, and that we are going to talk about this later. We complement our advice with the fair value calculations and the hedge accounting requirements in order to consider PPAs as hedging instruments. Just to give you an update of how the PPA markets is right now, or what we are seeing when we advise our clients. In this past year, we have worked with around 100 PPAs, being most of them financial PPAs. Our clients continue to be mainly generators, but it's true that we are starting to see a lot of end consumers as clients in sectors like pharma, retail, consumer, and teleco. We have proved that end consumers are usually more concerned about the accounting and financial implications that PPA can have in their financial statements. In terms of structure, more than the 50% of the PPAs that we see are swaps with maturities between 5 to 10 years. But it's true that this past year, we have increased the number of options, like options, mainly floors, that we see in our clients. These floors can be there are two types of floors, floors with a fixed premium and floors with a premium that is conditioned to the evolution of the spot price. We are going to see later why data to calculate the valuation of these floors is really relevant in this situation that we have right now. In terms of price range, as Alvaro said at the beginning of this conversation, fixed price of swaps have decreased over time, and we are seeing already swaps with prices between 30 and 60. It's true that if we focus on the solar profiles, these prices are reduced to a range between 30 and 35 euros. Meanwhile, when we talk about floor or options, the price has also decreased to strike prices between 25 to 30 euros. And with premiums, if we talk about fixed premiums between 5 to 7 euros per megawatt. One of the most important aspects when signing a PPA is the potential accounting impact that the PPA can create in the financial statements. We can say that there are two main accounting considerations. Physical PPAs that are the most preferred option for the clients because physical PPAs are not considered as a derivative. And then you don't have to record the fair value of the PPA in your balance sheet, and there is no other accounting implications. Physical PPAs are considered executory contract, and the only accounting that you have is the income or expense that you have with the PPA. But it's true that the majority of the cases that we see in the Spanish market are financial PPAs. And financial PPAs for accounting purposes are registered as a derivative with fair value recorded as a financial asset or liability. Then the fair value changes can be recorded in two different ways. If the PPA is considered a speculative instrument, then the fair value is recorded in a P&L account. And imagine, considering the volatility of the electricity price that we have right now, if a PPA is considered a speculative instrument, it can create a lot of volatility in the P&L account. That's why when there is a financial PPA, it's really important to consider the hedge accounting alternative that you have in IFRS or your local GAAP in order to consider the instrument as a hedging instrument. In that case, then the fair value change will be recorded in OCI without impacting the P&L account. But it's true that hedge accounting, it's something complicated to be achieved because you have to comply with the hedge accounting requirements that the local GAPs and IFRS establish for this kind of instruments. Also take into account that there are physical PPAs, and currently we are seeing some cases that have certain clauses that are considered embedded derivatives that need to be accounted as derivatives with the same accounting implications. These clauses may be things like, for example, the take or pay clause or the zero floors in the PPA when prices are negative. As we have said, PPAs that we see are mainly financial PPAs, and we have to record those PPAs as its fair value in the financial statements as an asset or a liability. That's why we need to develop complex and robust valuation models in order to calculate this mark-to-market or this fair value. In order to develop a solid valuation model, we need to take into account two main factors. The first one is the underlying complexity of the PPA we are evaluating. We have to take into account that for the valuation model, we have different types of PPA. It's not the same to value a swap in which we can use a cash flow discount model. But if you have options, then you need a more complex valuation model, like, for example, Monte Carlo. Also, volume profiles can affect the valuation model you are developing. For example, you can have a base load structure, or you can have a solar profile structure, but sometimes you need to estimate the volumes you are introducing in your model in order to calculate the mark-to-market value, because it's, for example, a pay-as-produced PPA, and you don't have the exact volumes you have to calculate the mark-to-market. But the second factor, and I think the most relevant factor, is the data you use to calculate the fair value. As you know, in the Spanish market, we don't have public curves with observable or liquid data for long-term valuation. That's why we always recommend to have access to solid and bankable price curves like the ones AleaSoft can provide to calculate this fair value. Also, these curves can be used to calculate volatilities that are needed when evaluating floor options. But also, other clauses or other aspects that we are seeing that are affecting evaluation of PPAs are clauses like, for example, the negative price clauses or the zero floor, as I said before, and the no settlement clauses when prices are negative, that are making us to modify our evaluation models this year if compared, for example, to what we did last year. So as said before, robust valuation models are very relevant when calculating fair value of PPAs. Just to conclude with this last part of the webinar, just to remind you these three aspects when signing a PPA. First of all is the structure of the PPA. PPAs can contain clauses or can be structured in a way that is a deal breaker for the parties involved in the transactions, maybe because they create accounting impacts that are not desirable, or maybe because the valuation model is too complex to be followed during the life of the PPA. As said, a valuation model is very relevant. Using robust data, like, for example, AleaSoft can provide you for a long-term valuation, is very relevant. It's something that auditors are putting a lot of focus in. And at least, as we said, accounting implications of the PPAs and reducing potential volatility in the P&L account is crucial. That's why knowing since the inception of the PPA if your financial or virtual PPA can comply with hedge accounting requirements in order to reduce volatility in the P&L account is very relevant, and it has to be considered before closing the PPA structure. So that's it. I don't know if there are questions or you want to add something. Thank you very much.
Thank you very much, Carlos, Alvaro, and Barbara, for that great presentation. And thank you again for sharing this time with us for the 5th year consecutive. And unfortunately, we have run out of time, but we can answer a couple of questions if there are some. Oriol, I see that you already have one selected.
Yes, two very fast questions. Are your market price forecasts bankable? Yes, they are bankable for most of the Spanish banks and also some banks in the European Union. Another question about market prices in Spain. Are they going to drop and be more volatile due to more renewables, or they are going to increase and be more stable due to more batteries and energy storage. It's going to be a balance between those things. So right now we are having a lot of renewable energies, but we have not much storage and we have low demand. So we have relatively low prices and a lot of volatility. As energy storage increases, as demand increases, prices will come slightly less volatile, and they will slightly increase and be more stable. So it's going to be a balance between both things.
Okay, so yeah, we are not receiving more questions. And yeah, as Uriel mentioned, I invite you to register to our next webinar in November. Yeah, we will share it with IPVAL, and it will be about batteries, hybridisation, and energy storage. So thank you again, Uriel, Carlos, Álvaro, and Barbara, for your presentations, and the audience for joining. Have a nice day.
Thank you.
Thank you.
Thank you. Goodbye.
Bye.